Hello Professor, my name is Sahil J and I have my team members here, Peng, Sahil C and Shalaka D. We are here to present you the analysis report on the two companies, Corona and Budweiser. I'd like to add a note here, these two products, the Corona and Budweiser, are basically brands which are owned by these parent companies, namely Constellation Brands and inBev. Starting off with Corona or Constellation Brands, this Corona is produced by Constellation Brands in Mexico for export to the United States. In 2013, the company acquired the US rights to Corona, and the company owns more than 100 brands in wine, beer and spirits. It's basically a multi-category supplier. It is the third largest producer and marketer of beer in the US market. It's also publicly traded under the New York Stock Exchange under the ticker name of STZ and listed under the S&P 500 index. The company goes by the vision to elevate life with every glass raised. Next up is Budweiser. Anheuser-Busch InBev SA is the global brewer for Budweiser. The company has a portfolio of over 200 beer brands such as Budweiser and Stella. AB InBev is publicly traded under the New York Stock Exchange under the ticker of BUD. The company strives to be the best beer company bringing people together for a better world.
History of these two companies. First is Constellation. The Corona is first brewed in Mexico City in 1925, and in the next year they decided to market beer in the clear colored bottles instead of the dark yellow bottles like other beers. In 1981 they introduced the beer to US, and in 1997 they achieved the highly selling imported beer in US. And last year, their stock price increased by more than 40%. They initiated the quarterly common stock cash dividend for the first time in the history of the company. And then is the AB InBev. Budweiser is first. They have the first brewery implemented pasteurization in the U.S., which greatly improved the shelf life and the transportability of the beer. And in 1936, they introduced the metal can in U.S. In 1957, they became the top-selling beer in U.S. In 2008. inBev took over, several cost-cutting measures were implemented, and high-quality beer phased out the markets. In 2011, Budweiser was available in over 80 markets. In this year, the name Budweiser will change to America from May until the November election, but because its parent company is based in Belgium, which resulted in great objections on Twitter. And then I'll talk about Street's position and the expectations towards Constellation. The analysis have a high grade on this company. They think there's a growing number of Mexican drinkers, and the market really like this Corona, and this will outweigh the fact that they have a high debt management risk. And to the AB InBev. The analysis have very diverse opinions. Most of them think this brand is outdated. The young drinkers have never tried it. And then I'll talk about the risk factors. They're connected from the 10K reports. I'll just mention the most important ones. First, Constellation have a high dependency on the sales of Corona, but the customers' preference and taste may change over time, and they have a supply risk of Mexican beer brands. Now they're dependent on our Nava brewery, which is a facility located in Mexico. They are now expanding this brewery, but there's a risk of project delayed and cost overrun. And they have a risk of supply of quality waters, agriculturals, and other raw material. They particularly mention they have substantial operations in California, and here now we are short of water. And in recent years, they have incurred substantial indebtedness. Their ability to satisfy the obligation will depend on their future operations. And they have potential decline in consumption of products because now there are fewer drinkers than before. Their Class B common stock is principally held by the members of Sense family. As a single class, they have the right to elect directors and make some important decisions which require the vote of the stockholders. And then is the AB Inf. They pose many risks similar to the Constellation, so I will just brief some different ones. First, they may be unable to obtain the necessary fundings and may face financial risks due to their level of debt as a result of the acquisition of the SAB Miller, and they may be unable to successfully integrate the SAB Miller Group or to realize the anticipated benefit for this acquisition. And they are now exposed to antitrust and competition laws in certain jurisdictions. And then I'll talk about the business segments. They're connected from the Tanker report as well. The Constellation report their business segments by product. First is the beer. They have 55% of the total segment net sales. The wine has 40% and spirit have 5%. And then it's AB Inf. They report their business segmentations by regions. They evaluate the net sales and the revenues. First, in Latin America North, they have 27% of the total net sales. North America is 26%. Asia Pacific is 90%. Europe have 9%. Mexican has 9%. The Latin American South has 8%. And the global export holding companies has 2%.
So let's talk about the key competitors of both the companies, starting with Constellation Brands. So the first competitor is Heineken NV. This company was started in 1864 and it has more than 200 brands. The second company is AB InBev. This company boasts of having more than 250 brands, and this business is spread across like 6 geographical regions, and it has popular brands like Budweiser and Budweiser Light. The third one is Miller Coors LLC, which is basically an acquisition of 2 companies, SAB Miller, which is based in UK, and Molson Coors, which is based in US. And they have popular brands like Coors Light and Miller Light in their name. So let's look at some of the statistics of the companies. You can see that Constellation Brands at 15.98 of net income growth as compared to all of its competitors combined, that is of 23.69, which is a pretty good growth. And as we can see in the market share, the company has like 63.09% of market share as compared to its competitors of 38.91, which is a pretty good market share. Let's talk about the key competitors of AB InBev, starting with the first company, SAB Miller, which we just saw, which is a part of the acquisition of Miller Coors, and it owns 58% of the shares. Second is Carlsberg Breweries. This is basically a brand, Danish brand, and it has popular brands like Tuborg and Carlsberg to its name. And let's look at some of the statistics of AB InBev versus competitors. As we can see, that AB InBev has 49% of market share in US as compared to its competitors, that is of 51%. So as you can see, the 49% is pretty good market share as compared to its competitors. Okay, now let's talk about the vertical analysis of both the companies. Starting with the balance sheet components, you can see that current assets of Constellation Brands of 17.55% are more than AB InBev, which is 13.59%. which shows that AB InBev has lower liquidity as compared to Constellation Brands. Secondly, current liabilities of AB InBev is 30.76% as compared to the Constellation Brands, who has current liabilities of 22.2%, which depicts that AB InBev has more immediate liabilities to deal with. Now coming to the income statement components, AB InBev has higher percentage of gross profit than Constellation Brands. The cost of goods sold comprises of 75% of total cost of the brands, and operating income, which describes the stability of the company, is higher of AB InBev, which shows that AB InBev is more stable than Constellation Brands.
So this is the horizontal analysis for the 2 companies, Constellation Brands and AB InBev. Starting with the total assets, there's an increase of 12% for Constellation Brands and there's a decrease of 5.5% for AB InBev. And going on to stockholders' equity, there's an increase of 13.67%, and this is mainly because of the significant increase in the retained earnings for them. And AB InBev really they are going down, and there's a decrease of 15.67%. The total liabilities for Constellation Brands has increased by 12%, whereas for AB InBev this has gone down just by under a percent. Coming to the income statement components of the horizontal analysis, the net sales, Constellation Brands has been really doing well. They have increase in net sales of about 8.6%, and there's a decrease for AB InBev of about 7.34%. And the gross profit as well for Constellation Brands is 14.10%, which is quite comparable to the industry average here. Whereas for AB InBev, this has been going down, and it's 6.5% less at this time. The main reason for the increase in gross profit here is mainly because of the cost of goods sold, which has gone down for them. And the net income for Constellation Brands has increased by 25.8%, whereas there's a decrease of 10% for AB InBev. And what contributes towards this increase in the net income is both from operating activities as well as from the earnings from unconsolidated investments. Next is the investor position. We have two ratios: the return on equity and the return on assets. These are the profitability ratios. When you go to see the return on equity, it's higher for Budweiser, which is 17.96%. But when you go to see the return on asset, it's better for Corona, which is 6.58%. And we feel that the return on asset is a better measure than the return on equity here. And the next is the financial leverage. So you can see here that Constellation Brands has a better financial leverage, that is their value is smaller, which means that they are able to get loans, and they are able to get money at a lower rate of interest, and they use these funds to get a higher rate of return. So that is, using lesser debt, they're making better utilization of their funds. When we come to the dividend section, it's much clear for Budweiser. It has been really good. It has a dividend per share of $3.95, whereas for Constellation is just 124. And even when it comes to the dividend yield ratio and the payout ratio, these are much higher compared to the industry standards, where these guys are offering a payout ratio of 76%. Next up is the earnings per share, and this is the most looked out for in all of the when all of the investors are about to do an investment. So when you can see here, when they started off, or back in 2013, there was a huge difference in the earnings per share, and then when you can see moving down to 2017, they're almost about to merge, and in 2016 there is a difference in their shares of about, let's say, $1.50. So to summarize, all in all, both Budweiser and Corona would be good investments, seeing the industry and the beer business growing. The net sales are supposed to grow by 12 to 14%. But what we feel is that Corona or Constellation Brands would be a better investment in terms of the long-term goals. And this is also, there are other factors such as the operating income growth, which they're going to see of 22 to 24%, and they have made the recent acquisition of Ballast Point, which they're going to really benefit from. When it comes down to the short-term investments, we feel AB InBev is better because of the high payout ratios and the dividend yield ratios that we saw.
Let's look at the key drivers for the two companies, starting with Constellation Brands. Firstly, the company focuses majorly on attracting more customers and increasing the distribution of its leading brands, thus leveraging the existing portfolio. Secondly, the company significantly invests in enhancing the packaging and design of its existing products and developing new products. Third, as a part of market strategy, the company has strengthened its relationships with wholesalers and retailers, as it is expected to increase the sale. And lastly, the company has been consistently involved in mergers and acquisitions, which help them to get more infrastructure and amenities, and thus enhancing their production capability. For AB InBev, the first key driver, over years, the company has developed a deep understanding for the consumer needs and the occasions when the consumers enjoy beer. So focusing on the sale, marketing and production development based on this criteria helps to generate a greater market share. Secondly, the company focuses on leveraging the existing global brands like Budweiser and Stella, which helps to develop stronger relationship amongst its customers around the world. Third, premiumization and invigoration. It involves developing excitement and aspiration amongst the consumers for the beer, especially among the millennium consumers. Fourthly, the company focuses on raising the perception and the relevance of its core products, which generate majority of its volume and revenue. And lastly, the company focuses on competing more effectively for the share of the total alcohol market by launching innovative products which are alternatives to wine and hard liquor. AB InBev's mixed ale beer products are one such example. Key challenges for Constellation brand. First is global operation. So the risk associated with international markets include changes in the local and political, economic and social conditions, restrictions on the foreign ownership and investment, or on repatriation of cash which is earned in countries. Secondly, if the revenue is derived from the operating companies which have non-US dollar currencies, then operations are affected and the effects can be seen in the financial statements. And thirdly, beer industry is highly competitive, so any inability to maintain or increase the prices, or the entry of a new company in the market, or the overall decline in the beer consumption can significantly affect the company's market position. Then key challenges for AB InBev. Firstly, economic recession, credit and capital market volatility, and economic and financial crisis. These factors, they can lower the revenue and reduce the profitability. The credit and capital market volatility, which the company experienced recently, led to a significant downward pressure on the stock prices and the credit capacity of the investors. Secondly, approximately 66% of the company's revenue is generated or comes from the companies which are operating in foreign currencies. So the devaluation of the foreign currencies as compared to the US market can affect the revenue. Thirdly, the company's major portion of operating expenses is related to raw material, commodity and energy. These markets can experience are likely to experience shortages or the fluctuations in the prices, which can affect the production capabilities. And lastly, in United States, AB InBev sells its beer to the wholesalers, which distribute it to retailers and eventually to the consumers. As independent companies, the wholesalers, they make their own business decisions, which may not be in aligning with the interest of the company. Then this is the compensation plan for Constellation Brands. As we can see that for 2015, the total executive compensation was approximately 23.5 million, out of which 8.5 million was only for the CEO. Similarly, for AB InBev, for 2015, the total compensation given to the executive board members other than the CEO was approximately 26 million, and the CEO had his share of nearly 5 million. Along with these two factors, the executive compensation for AB InBev also depends on other factors like long-term incentives, stock options, pension scheme and other benefits. Now let's look at the key ratios. First is current ratio. As we can see for 2015, the current ratio for AB InBev is low, like 0.64, while the optimal range is between 1 to 2. So this indicates that the company has more current liabilities than its assets, and it might not be able to clear its current liabilities in the near future. Next is receivables turnover ratio. AB InBev is doing well here. It has a receivable turnover ratio of 13.21, which suggests that it is effective in its credit granting and collection activities. And the last is debt to equity ratio. Constellation brand, it has a higher debt to equity ratio, which means that they are dependent more on its debts to fund its assets, and thus have a higher risk of debt as compared to AB InBev.
Now let's talk about the position as the creditor. So we have considered these four ratios. The first three ratios are the liquidity ratio, and the last ratio is the solvency ratio. So considering the current ratio, you can see that AB InBev is 0.64, which is very much less than what it is of Constellation. This says that AB InBev have more current liabilities than its assets, so that's not a good thing. The next two ratios, cash and quick ratio, shows that AB InBev have more liquid cash or cash equivalents than Constellation. That is a good thing. And the last, solvency ratio, it shows it's actually the lower the better. So as you can see, AB InBev has lower debt to equity ratio, which says that it's good. I mean, for from the perception of a creditor. But as you can see, overall it's kind of dicey. But still, as a creditor, I would like to say that Constellation Brands is much more preferable. Thank you.